Welcome to Remarkable Retail Podcast, Season 11, Episode 14. I'm Michael LeBlanc.
And I'm Steve Dennis.
On this episode is Jason Buechel, Vice President, Amazon Worldwide Grocery Stores, and CEO, Whole Foods Market. Jason shares his surprisingly large current state of Amazon in the food business and ambitions for Whole Foods and their various physical formats. In the news, we're getting an early read on the Black Friday Cyber Monday retail event. Meet the new boss, same as the old interim boss at Kohl's. A reminder, you don't take sales growth percentages to the bank. And a look at modern e-commerce. And we'll be back to talk about what was particularly remarkable this week and a look around the corner. Steve, how was your Thanksgiving?
It was very good. I had some nice time with my daughters, and I did break my rule of not venturing out on Black Friday. Well, I did not go out on Black Friday. I went out on Saturday to the mall just to check things out.
All right, let's get into the news. We already kind of guessed I started it. We started an early read on holiday spending. You walk the store, do people have bags in their hands, that kind of nonsense. But
yes.
do you think it's a very agentic Christmas? We were talking about that in terms of AI. And what have you heard from folks like Adobe and Salesforce that start rolling out numbers?
Yeah, we've got some stats. So we're recording this before we will have any Cyber Monday data. So we'll come back to that next week. But in terms of how the early part of Black Friday, Cyber Monday looked, some different perspectives. They all seem to line up in the same direction, which was e-commerce was pretty strong, depending upon which data source you look at, kind of in the 8 to 9% versus last year range, which is better than the recent trend. MasterCard Spending Pulse had physical stores up just 1.7%, but that frankly is not very different than what we see. So I think as we look at the early results, reasonably strong, nothing really to write home about. But my standard caveat is historically, there is not a tremendously good correlation between Black Friday, Cyber Monday results and what the whole season looks like. A couple of the more interesting things that just lift up very quickly. One is promotional intensity definitely seems quite high, higher probably than last year. That's probably not surprising just given the economic concerns. But as it relates to inflation, order volumes on Thanksgiving in particular, the actual units fell by 2%, but average selling price was up about 8%. So now, how much of that is literal inflation? How much of that is mixed towards bigger ticket items? We don't have that level of detail, but there definitely appears to be a little bit of this overall mix shift. In terms of it being an agentic Christmas, traffic from agents up a lot, a few different sources of data, but it looks to be in the 5 to 6 times range compared to last year, relatively small base. Rufus, which some people will know is the Amazon agent, up 70% just since early November. And Andy Jassy, CEO of Amazon, has commented that they see materially higher conversion. I think we've talked about this a couple of times, that the agentic agents seem to be really improving their conversion. Now, there's a little bit of an issue of correlation versus causality. There's something about the people that choose to go to agentic agents that are more prepared to buy. So I wouldn't necessarily conclude some sea change here. So I think my overall takeaway on this is just clearly things are moving very quickly. We'll come back on another thing related to agentic AI post-interview, but you got to be a little bit careful not to make too many conclusions as to how substantive a change this ultimately is. But definitely a more agentic Christmas than last year for sure, where it basically was non-existent.
So last week we had some quarterly earnings that caught out before Thanksgiving. Let's start with Kohl's, because they also announced some new, some changes in their executive suite.
Yeah, there were quite a lot of earnings last week, as there will be coming up this next week. But I thought I'd just call out one retailer in particular and then make some broader points in the interest of time and I guess getting to some so whats. But yeah, from Kohl's, for international listeners, may or may not know, moderate department store, quite large, been struggling for a while. One of the things that's really key about their business is Sephora. If you listened to our interview last week with Artemis Patrick, Sephora has, I think, about 1,000 Sephora's within Kohl's, and actually Sephora has been one of the key drivers of the business. The rest of the business has been really, really tough. Well, anyway, they announced that their interim CEO, Michael Bender, who's been interim for about 6 or 7 months now, I believe, will be moving into the permanent role. Now, he has a ton of board experience. He's on like 6 different boards, but really very little merchandising experience in Kohl's categories, but there are obviously other people on the team with quite a lot of experience. His most recent CEO experience was at iMart Express, which is a relatively small optical company, so that's not obviously super translatable to Kohl's. And he hasn't been in an operating role other than this interim role for over 3 years. I think the reality here, and I don't know this guy, certainly he's got a good pedigree overall, but it's not the obvious sort of background for this job. I think the reality is no one with the right experience is going to take this job because it is such a challenge. But anyway, segueing into their quarterly results, Wall Street loved their quarterly results. The stock went crazy for reasons that I'm still trying to decipher because the results really weren't that great. Comp store sales down 1.7%, so they continue to lose a lot of relative market share. Just a matter of perspective, their quarterly sales are down nearly 22% since 2019, at a time when overall retail is up quite a lot. So they have really been hemorrhaging market share. I guess the read on this, because they did guide, their expectations were raised a little bit, but I mean, their expectations are basically to tread water. So again, I'm not so sure what's so exciting. One little kind of stepping back comment I wanted to make, because it does get to a lot of my concern about some of these turnaround stories, not just the department stores, is I think a lot of people ignore what is really the total addressable market for this sort of business. Because when you start to cleave out all the folks that have migrated to off-price, are they really, even though they may sort of fit demographically or within the kind of price points, are they really addressable anymore when they've clearly said that they prefer the more treasure hunt kind of thing, but also just frankly from a convenience standpoint, as we've talked about on the podcast before, off-price retailers have 4, 5, 6 times as many locations as a Kohl's does. So there is a convenient play, smaller stores, easy to get in and out of, on average, much less travel time. So part of the reason why I'm so skeptical about these department store turnarounds is what used to be the addressable market 20 years ago is clearly much larger. But as we've seen the market share contract for these formats, what is it going to take to win back those people? That is always my challenge. And so even though your comp store sales declines may not be as great, I don't think that's really a sign of a turnaround. But anyway, we will see if Mr. Bender is able to.
And you don't think, in the context of the TAM, you don't think that having a powerful e-commerce offering, for example, which off-price does not, for Kohl's, kind of closes or narrows that gap with the ability to acquire and keep customers?
It's a bit of an advantage, but I think you have to understand the purchase occasion, what people are really looking for. From a pure convenience standpoint, the problem with a lot of moderate department stores is the exact or similar products are extremely widely distributed. There's very few things you cannot find in a Kohl's, either an equivalent private brand, but you can find a lot of that stuff on Amazon.
The other thing you talked about in this subject line was profitless prosperity. I mentioned it off the top. Merchant used to say to me, you don't take percentages to the bank.
Right.
So, we often look at sales increases, but what are you seeing in terms of profitability, EBITDA increases, or what the status is for a lot of these results?
Yeah, in the last couple of weeks, we talked a little bit about Gap last time, but Abercrombie & Fitch, Best Buy, Williams-Sonoma, several others that reported in the last week, some of them had decent sales increases, but their profits went in the other direction. Now, you can make an argument if your sales have been weak that the extent that your trend is changing is encouraging. It can be. But if profits are going in the other direction, you don't know to what degree you're kind of buying that business. Would the customers have, chosen to shop with you had the prices been more reasonable? So it's very difficult. I guess I say this, number one, to get focused on when we say a turnaround is occurring, is it ultimately actually happening on the bottom line? And in many of these cases that are getting a lot of press, it absolutely is not. Doesn't mean it won't happen. It's also complicated for sure by the tariff cost. Many of the retailers that had good sales increases but lost ground on profits, calling out tariffs in particular. Now, it may take some time as folks are transitioning their supply chain to be able to mitigate that further. They may be finding out, well, can we actually price differently to be able to get our gross margin dollars up a little bit? So I think a broader thing I would just say as we move forward, maybe not so much in this quarter, is to focus on gross profit dollar growth. You can look at the top line, but if your gross profit dollars, which is ultimately, particularly for a business, a lot of these companies we're talking about have a big physical store presence. They have a lot of fixed costs. You got to have the gross profit dollars to be able to, flow that down to the profit line, because there's only so much you're going to be able to take out in terms of SG&A. If you still got a store base, you got to have sales associates, got to have the lights on, et cetera. So anyway, I think it's something to get beyond the headlines of, we're excited because the sales growth is a little bit better. But yeah, if the profit's going in the other direction, I would want to look a little bit more carefully. But, some of these brands, we're going to give them a little bit of time to see if they can work through, because the tariff stuff is obviously relatively new and still not clear exactly how it's going to settle out.
Lastly, you're talking about the rewiring of e-commerce. This was quite intriguing. Talk about what you're thinking there.
Well, we've touched on this a little bit, and I think it's something we'll want to come back to after the holidays. But as we get some of the earnings, and this is not necessarily a new trend, because as I mentioned, we've talked about this a little bit. It's just really interesting to see what companies are reporting about their e-commerce growth. And for the most part, if you look at some of the biggest players, Amazon, Walmart, Kroger, they're growing way above the e-commerce average. So Amazon growing about 9%, Walmart over 20%, Kroger 15%. We'll see Costco. Costco's a relatively small player, but when they report, they've been growing like 15%. So you get some really big players growing at close to or well over double-digit rates. But then, if you look at what we just learned this past week or two, Target growing only 2.4%, Best Buy 3.5%. So big players well below the average. And really, if you look at the whole picture of e-commerce from a gross merchandise value perspective, just 10 companies in the United States represent 63% of all the volume. And you also have, really outside of Amazon, so many marketplaces that are really dominant. Now, marketplaces are more bigger share outside of the U.S., particularly in China. But when you think about so many retailers now competing in e-commerce, very few of them are keeping pace with the overall growth, and we're really seeing this concentration. So, as we've probably talked about the whole time we've done this podcast, e-commerce is only about 20% of all retail. But, what is the percent of profits? The answer, much less. As you have this shift in share, as you have many retailers really struggling with the profitability, how is that going to sort itself out? So one real example of this just in the last couple of weeks is Kroger, the big supermarket chain, which is taking a $2.6 billion write-down on their automation. Folks that have been following this will know that they were investing very, very heavily, as you can tell by the size of the write-down, in
That's
automated...
with the Ocado business, right?
Ocado,
the Ocado solution, yeah.
So they built these very large automated fulfillment centers. Well, those are closing. And they're going to be shifting more to in-store fulfillment. Now, I think a lot of that has to do with just the challenges and profitability in these businesses. So I don't think there's enough attention paid to the underlying economics of e-commerce. You mentioned about the off-price guys not really being in it. Well, part of the reason is because they haven't figured out how to make any money in it. So, so I guess all of this is somewhat shopping patterns and people that just have more compelling offerings. So obviously Amazon, Walmart, a bunch of others is really, really good at this. But the other part is who's actually able to drive this and make money. So I just think we're going to see more ripple effects, particularly if we have an overall slowdown in the economy, because people are obviously going to be looking for ways to take cost out. And this is not something where AI is going to revolutionize your profitability and fulfillment, right? So it can be important. But anyway, I think it's just something to keep on. Maybe this should have been on the radar screen segment portion of our program. But anyway, it's a little bit more tied to some of the things I'm seeing in earnings.
Just back to the grocery aisle, your comment on Ocado and Kroger, the same thing's happening on this side of the border. And the Ocado solution only works financially with massive volumes, right? It's highly automated, massive volume need to go through it to pay that technology. And, the bet was during COVID, hey, it looks like e-commerce and grocery is going to explode. And it just hasn't been the case. And or the DoorDashes and the same-day delivery solutions are just taking its place. All right, well, that's a wrap on the news. Fascinating insights into both profitability and mix. And 2026 is going to be a super, super interesting year as this all kind of settles out. Speaking of Amazon, we were just talking about Amazon. Let's get now to Jason Buechel from Amazon.
Jason, welcome to the Remarkable Retail Podcast. We're so excited to have you. It took us a little while to get here, but now here we are, and we're excited to talk to you. Where are we finding you today?
I just wrapped up some meetings in Seattle this week, which is great.
Awesome. Well, you're getting this is very global. I'm in London this week, and Michael's in Toronto, so we got an international audience and international team here doing this. But why don't we just jump in because we have a lot to talk about, certainly. But maybe just for folks that may not be as familiar with you and your journey, could you just talk about how you got to Amazon or how you got to Whole Foods, how you got to Amazon, and what you're doing today?
Thanks again for having me on the podcast today. As far as just a little bit on me, I've had a very deep connection to food since I was very young. Both my grandparents were dairy farmers. My dad was a cheesemaker. I was that geeky kid who was gardening since I was 7 years old. I took produce to the county fair. And at the same time, I was also that geeky kid who was really into technology and computers. And that led me to pursue a college degree on the tech side. And out of school, did consulting for a few years in the retail industry, helping retailers implement technology, new business processes, and ultimately better serve their customers. And it was through that set of work that led me to join Whole Foods just under 13 years ago, and joined as the head of the technology, as the CIO, as well as at the time we called it digital businesses, otherwise known as e-commerce today. Really enjoyed having the opportunity to connect with so many different parts of the business and expanding my role over time at Whole Foods into some of our store support functions, and including operations. Became the COO in 2019. And then when our co-founder John Mackey retired in 2022, stepped up into the CEO role. And over that time, about 8 years ago, we became part of Amazon, which has been a great journey and helping extend Whole Foods to a broader set of customers and elevating our experiences, and had the privilege to be asked to take on additional responsibilities this past January in leading our worldwide grocery operations within Amazon. So it's been a really fun ride, and I love food, love the grocery business. So for me, I have to pinch myself all the time, just in how I got here, and being able to do work that I love with companies I really admire.
Well, congratulations. It's been quite a journey, and I think quite a journey ahead. We'll probably put this link in the show notes, but in preparation for this, was reading a post that you did, I guess an internal kind of post outlining about how Amazon thinks about grocery. So maybe we can just start big picture with, why is growing and winning in grocery so critical to Amazon?
Well, first off, grocery is, one of the single biggest opportunities that we believe we have, within Amazon. It represents one of the largest categories for customers as you look at their spend. And at the same time, it comes with some of the greatest frequency for purchasing. And, when you bring those pieces together, it fits really well with how we like to serve customers across all of their different needs. And obviously for something like grocery, which is highly habitual and so important to consumers every single day. And, not having to point out the obvious, but everybody has to eat. And so making sure that we have compelling offerings in this space is, a really important part of our business. And when you look at the opportunity, especially globally, the value of what customers are going to spend in this space, it's more than $17 trillion over the course of the next 10 years. And, for us, figuring out ways that, we can take what has been a very complicated set of ways that customers buy today and figuring out how do we simplify it, that's some of the magic we bring as Amazon. When you think about the last 10 and 20 years, things have become more complicated for, customers. There's greater selection in brands. There's, different loyalty programs you have to navigate. There's the in-store and online side of things. And what this has led to is customers shopping between 4 and 5 different retailers every single month to, complete their grocery shopping. And when you look at them spending between $500 and $1,500 a month on groceries, if we can find ways as Amazon to help simplify that and make it easier, faster, and more affordable for our customers, there's a great win-win there. At the same time, as we can develop these trusted relationships with our customers where they see us as one of their most loved grocers, which is, one of our visions, ultimately, they're going to have a greater frequency of shopping with us. And they're not just buying more groceries, they're spending more on Amazon.com. And it's a greater way for us to be able to serve our customers across all different aspects of our business. What's exciting is we have a great foundation in place already. You might have seen in some of our previous earnings calls, Andy Jassy, our CEO, has talked, a lot about, where we situate in this space already. We're over $100 billion in gross sales right now. And that doesn't even include Whole Foods Market or Amazon Fresh. Customers for years have been stocking up their pantries in many cases with what we would call sort of the center of aisle items. And so we've got a great foundation there. And what I'm excited about is helping lead the work for how do we make sure we can have those perishable offerings available for our customers in the same way that they buy everything else from Amazon.com. And that's been a big focus for us this year.
It's a good segue into talking about how the business fits into the broader Amazon flywheel. You've already touched on several, which is traffic driving, frequency, and loyalty. Any other comments on its role, its being the grocery category role in the flywheel strategy overall? It feels like it's a big part of that wheel because of its frequency and potential loyalty. Yeah.
Yeah, absolutely. And, where I see the fun part of this is how do we create win-wins within our business? For our customers, they've been asking for ways for grocery shopping to be easier, faster, more convenient for them. And we want to be able to deliver on that. And as we can continue to attract more customers, bring them into this offering, it allows us to bring more suppliers into the mix. It allows us to help drive down costs for customers, provide, new services to make things easier and, more experiential at the same time. It also allows us to make sure that how do we serve, all of the needs that our customers have across a broad spectrum. Right. And that, whether it is, everything from the organic offerings at Whole Foods Market to, having great private brands like Amazon Grocery, which we just launched earlier this year, unique products that you can't find anyplace else. And you're coming to Amazon and Whole Foods and Amazon Fresh because of the differentiation that we can provide. And at the same time, we're making those things, easier and accessible on how you buy those items together, which again helps supports the broader flywheel. I mentioned earlier, as customers continue to spend more, they obviously spend more not just in grocery but other parts of the business, which again allows us to work with more suppliers, allows us to bring down costs, and as you can kind of tell, it's sort of a repeating flywheel as we continue to make sure that we can deliver on our mission of being Earth's most customer-centric company.
We'll be right back right after these messages. Promotional support for the show comes from Glass Media. How do you amplify the wow in your stores? With next-level in-store signage and displays from Glass Media. Glass Media boldly challenges the status quo by leveraging its world-class design, engineering, and manufacturing to elevate brand presence and drive both engagement and conversion. Find out why leading brands and retailers worldwide trust Glass Media to make their stores more remarkable. To take your visual merchandising to the next level, go to glass-media.com. Physical retail isn't dead, but boring, unremarkable retail is dead or dying. So how do you become the compelling signal amid all the noise, distraction, transformative new technologies, and escalating competition? If you haven't read Remarkable Retail, How to Win and Keep Customers in the Age of Disruption, Steve's first best-selling book, what better time than now? You'll learn the most important trends shaping modern retail today, explore Steve's 8 Essentials of Remarkable Retail strategic framework, and be inspired to rise above the rest. Remarkable Retail is available just about everywhere books are sold, as well as on Audible and as an ebook on Kindle for just $9.99. Now, you're not a company that lacks for resources. So talk about, you continue to innovate with things like Whole Foods Market Daily Shop. I visited your Amazon Fresh store in Lodi. Congratulations. Great team there. It's a really great store. You're opening stores, closing stores. What's the framework for when you expand and pull back, close and open? And you're doing some things in Canada here with the Whole Foods. And so how do you approach that? Because, as I said, it's not for lack of resources, but how do you think about growing the business from that perspective?
Yeah, I mean, it all starts with the customer. And, as you know, we're customer obsessed at Amazon, and making sure that we fully understand their needs is an integral part of how we operate every single day. You just mentioned Daily Shop. One of the things that we were hearing from customers, especially in our denser urban areas, is they wanted stores closer to them. They also wanted stores they could get in and out of more easily. If you've had a chance to spend, any time, in some of our Manhattan stores, we've got these big, beautiful flagship stores. But sometimes it's not easy to get in and out if you're just looking for, 1 or 2 or 3 items. At the same time, it's difficult to find the space for, a 40,000, 50,000 square foot store in Manhattan. So in looking at sort of what our customers were asking for and some of the constraints we were also dealing with, Daily Shop was a natural format that we felt it was important to test. And at about, 10,000 square feet in total, but still being able to have the breadth of assortment that you're going to find at a traditional Whole Foods market. Maybe we don't have as many SKUs, but we cover all of the same categories and essentials. We found a great win-win for customers where, they can get in and they can get out. Our earlier hypothesis on this business was that, customers would really use this as a fill-in or a top-up shop. But the reality is they're using as a full grocery shop. Even in 10,000 square feet. And as we've opened the first 3 in New York, it led us to continue to iterate. We just opened our 4th store in Arlington, Virginia, in the Crystal City area. And, for us, it's continued to iterate and putting our customers' feedback in place. And when you look at the first Daily Shop to the 2nd, to the 3rd, to the 4th, we were making iterative changes, going back to the most recent versions. We're very impatient. We don't sort of sit on and just, continue to say, well, we thought this worked and it didn't work the first time. Let's try the second, third. It's like, hey, our customers are telling us stuff. Let's make some of those adjustments so we can ensure that we're delivering on that experience. And at the same time, if something isn't working, we pivot and make adjustments. We want to make sure that we can bring the very best offerings for our customers. And, that's one of the areas we've been working on with Fresh and being able to take our customer feedback. And it's been great to make some adjustments and see our customers respond. When our, sales go up by 20% after making a series of changes and improving the offering and elements of the format, it's very rewarding for the team because we know that we're doing something that is delighting our customers. And, really that's what this is all about.
I'd love to, for the skeptics out there about some of your goals, give you a chance to respond, because I think you're quite aware, a lot of people say, well, it's not obvious why Amazon is going after groceries so much. If you think about Jeff Bezos' comment, your margin is my opportunity. Groceries kind of famously a low margin category. There's lots of very big, successful grocers out there. As Michael talked about earlier, you've been at this for a while, maybe not hit on exactly the winning formula to step on the gas for physical retail. So how do you think about that? I mean, you've touched on this a little bit, the white space, ultimately what's going to give you that edge. But can you just talk a little bit more about where you're hoping to end up, to the extent you can kind of put a little bit more meat on the bones of what we might expect over the next few years?
Yeah, absolutely. One of the things I want to, sort of reiterate on is the excitement we have about the great foundation that we've built over the years within the center store business that I mentioned a little bit earlier. And that really for us provided the opportunity that we have. We can see customers are, stocking their pantries with, what we would say the ambient grocery offerings that are out there. And the opportunity really shows up within the perishable space. And, historically customers, have leaned more heavily into physical stores in this space. And I think what we've done is sort of challenged ourselves to say, how do we make sure that we can cover this across all different ways that a customer wants to shop? And so we're going to continue to invest in our, physical stores business. We have over 100 stores in the development pipeline right now. But the area that I get really excited about is our same-day grocery delivery initiative that we announced earlier this year. We are currently available in more than 1,000 U.S. Cities and towns, and that will be 2,300 by the end of this year. And what we've done is making it so easy for customers to add these perishable items to their existing Amazon order. You don't have to go to a separate part of the website. It's, not this sort of unique just grocery experience. You can be toggling between adding, bananas and milk and eggs or any one of your favorite perishable products, ice cream, to your orders where you're buying apparel and appliances and anything else that you would want to be getting from Amazon. And it's all done within a single order. And again, this is another area where I think we heard from our customers, they wanted things to be easier and more convenient for them. And that's really what this offering has been about. As being a passionate grocery leader within the company, it's amazing when I'm starting to see items like avocados and bananas and strawberries that are showing up in the top 20 most sold items across Amazon. And then seeing our customer feedback on this side. And again, similar to Daily Shop, early hypothesis was, this can be a great way for customers to start doing just sort of add-ons, things I need right now for
lots
these
of frequency,
same day, free. But customers are actually building, baskets with us at the same time, especially those who are coming back and doing repeat shopping.
Maybe just one quick follow-up on that. First of all, I've used that service several times, and it works extremely well. So I can just speak from my own personal experience that I've seen how that works, and it's great. But as you think more broadly about seafood and just other produce, where it seems like a lot of consumers just really want to be able to inspect it, see firsthand, or just deal with impulse purchases as they're putting meals together, do you feel like you can use technology and same-day delivery to address most of that? Or is that really where you mostly are going to need physical stores to grab that kind of market share?
No, I think it's going to be in both areas. Even when I look at what we've seen in the business as far as more and more customers being comfortable shopping online for groceries, I think the pandemic really opened minds for some consumers, and we saw some stickiness of, customers who only shop physical stores, and during the pandemic came online and they've stuck with online shopping. I think one of the opportunities that we have is to continue to ensure whether you are buying a product in a physical store or online. It's letting customers know this is the same supply chain. The quality standards and effort and work that goes into bringing these products to you is something that we don't differentiate between channel. And I think at the same time, we'll be able to use technology for ways for customers to talk about what are some of the things that they're looking for in specific products. Different customers, when they're buying avocados, some want them to be ripe and ready to eaten today. Some want them to be ripe in a few days. Same thing with bananas. When you look at specific cuts of meat, there's different things that customers are looking for that traditionally you could only do, or it was only easy to do in a physical store. And we need to make sure that all of these ways that customers want to buy products can happen, whether you want them delivered to your house, you want to pick them up from one of our stores or pickup locations, to, at the same time, provide opportunities for customers to buy in store at the same time. And so I feel it's our responsibility to make that easy. So whatever our customers are looking, in whatever way they're looking to engage us, we can help support those missions.
I think of you as a grocer first, and an Amazon technologist second, a strategist. Let's talk about some grocery trends. So inflation has been with us. We see it very intense in some categories like beef, and that could sustain for many years. Food prices are up again, and we see shrinkflation. We see the companies reacting, shrinking pack sizes and trying to keep that price point in line. Now, how does the future of affordability for Americans and Canadians fit, or globally, into your overall immediate and long-term strategies?
Well, it's been part and parcel since our earliest days of making sure that we are bringing value and great price points to our customers. And that is inclusive of all the work that we do in grocery. I'm so proud of, the work, whether it's been within Amazon Fresh, where we situate from not only being price competitive, but making sure that we've got, great opening price points for customers to be able to buy products. I mentioned a little bit earlier the work that we've done with Amazon Grocery being one of our new private brands. Mm-hmm. We also have Amazon Saver, which is something that we've been, live with for over a year and a half now.
Prime membership. I love the way in the store that I was in Lodi. As I said, the QR codes, you're reading a smart card and it's telling me in the aisle and I'm a Prime member and it's giving me exclusive offers. It really ties retail media, technology, and practical dollar savings for people together. Yeah.
Yeah, absolutely. And, when we look at, our Whole Foods Market business as another example, in the last 18 months, we've reduced prices on over 25% of the items across the store, nearly doubled the number of promotions over that same period. When you look at, our upcoming, Thanksgiving holiday here in the U.S., the Amazon Fresh being able to feed 5 for $25. Our goal is to make sure that we have a spectrum of offerings for our customers. And the objective here is making sure no matter what your budget is, that we have offerings that can feed you and your family. And, that broad spectrum allows folks to sort of dial in whatever product and categories that they're looking for, that we've got options and selection that meets their needs.
Right.
And I'm so proud of, especially when I look at opening price points that we have across all of our different banners and channels and the promotions that we bring. We've been doing some daily deals in the perishable space as well, and have seen great adoption and have gotten great customer feedback. They share, they see their wallets being pinched, and it's really fulfilling to be able to see the work that we're doing here is resonating with customers, and they're coming back at the right moment, right? Helping build that trust. Yeah, exactly.
Yeah, you're really at the right moment.
Jason, maybe one more strategic question, and then I'll kick it back to Michael to bring us home. Obviously, you're going through a lot of integration with this One Grocery vision. So if people do read your letter, they'll get a little bit more about what that's about. But as relates to the Whole Foods banner and the Amazon Fresh banner, anything you can share about how you get this integration and blend and get this leverage, but try to keep those two nameplates, brands separate, or perhaps there's a desire to bring them closer together. Anything you can comment on that?
Yeah, all of this work starts, with the customer, as many of the efforts and initiatives that we take on within the company do. On the brand side, our goal is to have separate brands here. There are, different components and different reasons why customers might shop one brand or the other. And so when you look at Whole Foods Market, for instance, one of the ways that I like to describe sort of the offering is Whole Foods Market, we do the homework so our customers don't have to. And whether it's, our over 550 banned ingredients to our animal welfare standards, our cage-free plus egg standards, pollinator policy standards we put into place, we try to ensure that we have the highest quality natural and organic products for our customers. And so they don't need to be reading labels and doing the homework. We've done it for them. And that, brand trust is so important, I think, for the Whole Foods Market customer. And we're not going to do anything to change that. And at the same time, we know even the best Whole Foods Market customers do shop multiple other grocers every single month. I mentioned the 4 to 5 earlier. That goes for Whole Foods Market customers as well. What we want to do in Amazon is make it easy for customers to buy whatever product they want within our Amazon ecosystem. And there's a lot of work that we're doing to help break down some of those barriers. The work I mentioned earlier around perishables online is that we're allowing a vast majority of our selection to be available across all different parts of Amazon. And we want to continue to expand upon that selection assortment that's available there. One of the other things that we want to do is create better experiences for our customers across all different aspects of our business, whether it's shopping in store, online. And so one of the opportunities we have, and this is behind the scenes, is how do we make sure that our supply chain is the most efficient and the most productive as possible. So we're ensuring we've got the best in-stock position for our customers. The technology that we're building out, that we're not duplicating things, which at the end of the day is adding cost to the business, that we could be investing into our customer, whether in price or new experiences that we help build out for them. So the work that we're doing around One Grocery isn't about changing brands or the value proposition to customers. In fact, I think if we do it right, we can actually help amplify those pieces and bring even greater trust with our customers, but making it easy to toggle and shop whatever banner and channel that you want to within Amazon. Our One Grocery, mindset that we've talked a little bit about is making sure that we as a team in supporting our customers can operate the best way possible to bring those experiences to life. And that's really been where the work has been centered at. And as we continue to work through this, we're going to be customer obsessed in making sure that all of these different parts that we bring together ultimately are going to allow customers to have Whole Foods Market, to have Amazon Fresh, and broader Amazon, that we can be customers' most loved grocer across all the different brands that we bring out to our customers. And our goal of making grocery shopping easier, faster, and more affordable.
If we get you back on the podcast in 3 years' time, what would you hope the key storylines? What kind of questions should we be asking you? What have you accomplished at that point?
Yeah, well, I mentioned just the excitement that we have around the perishables on core. My goal would be that, for a vast majority of our Prime members out there, that we've brought this offering to you in some form or fashion, whether you are living in an urban area or a rural area. And then I think we're going to see so much transformation with customer experiences that are going to be delivered through technology and AI, and being able to talk about how we made it easier, whether it's for a dietary restriction or preference, even as some consumers are starting to eat based upon their own personal biome. How do we make those things easy for customers? And whether it's around the work that you do for planning what you're going to buy and the meals that you're going to prepare to, greater support as you're shopping the store, in person or doing something online, to your post shopping experience. How do we become a trusted partner? And in 3 years, I'm sure we'll love to chat through all the amazing things that we've built for customers for them to have enjoyable grocery shopping experiences.
Well, fantastic. Listen, Jason, it's been such a treat to chat with you about all things grocery and Amazon. And it feels like you're leading the business at what feels like a really key inflection point for Amazon in the category. So, congratulations on the success so far in such a great career in grocery, and wish you much continued success. And thanks so much for joining Steve and I on the Remarkable Retail Podcast. As I said, real treat to talk to you. And again, we wish you much continued success. And let's get it in your diary now. 3 years from today.
That's right. Yeah, it should be a little bit easier if you're booking 3 years out. So
we're booked 3 years out. That's okay. We work at a long profile. Anyway, thanks again for making time for us.
That's great. Thanks, Michael. Thanks, Steve. It was great joining you today.
We are back. A great interview, and Steve, persistence pays off. We've been talking to the Amazon folks for quite a while, and really thrilled to get Jason on. He's very generous with his time and his insights. Now let's move to what was particularly remarkable in your mind this week.
Well, I call this segment The Empire Strikes Back, and in this case, the empire is Google. As much as there's been so much talk about ChatGPT, Claude, you name it, and I have a prediction which we'll be dissecting, I guess, in a couple of weeks, how well I did about the changing nature of search. It is definitely changing, but it is very hard to say that Google is being especially hurt by this. Not only are they maintaining their share of search, at least according to several parties that track such things, they have recently released Gemini 3, and I would say the results so far, or at least the commentary on it, is it's pretty darn good. And so I think if people were worried about Google really losing their edge here, maybe not so fast.
For me, I was struck by this article on CNN Business. Could this be Sears last Christmas? And at first I'm like, there's still Sears stores?
I know, that's always the shocking thing, yeah.
Yeah, I guess there's a handful of stores, like 5 or something, and I was like,
why? It's hard to understand, but yes.
I don't even know. I've lost track of who owns them, and then they've been, like the snows of yesterday, been gone from this earth for a long, long time in Canada. I don't even think of them. So anyway, I was struck by the remarkability that they're still clinging on. Who goes and shops at Sears? I don't know, but I guess it's a proximity thing. Anyway. What's on your radar screen for the week's ahead?
Well, of course, I guess we have to, by law, talk about the holiday spending season. So some of it is just seeing what goes on. I think the thing in particular to really pay attention to when I was out over this past weekend shopping, to me, and again, I was saying to my daughter Elena that I really need to take better notes because my memory of what was true last year at the same time isn't so great. But my overall impression was certain retailers that generally are more full price retailers or not super promotional had the whole store on sale. J. Crew, 30% off everything. Banana Republic, 40% off everything. I don't know how typical that is, but as you look at the more full price retailers, particularly the luxury players and some of the more premium players that really don't discount that heavily, except maybe they do something special for Black Friday, for Cyber Monday. As we look ahead, what is the level of discounting with those type of stores? Because I think that is really an indication not only of what profitability might come in looking like for the holiday season, but it speaks to a level of desperation because there clearly are a lot of players that really resist being on sale or doing the kind of, everything on sale kind of promotions. So I think that'll be interesting to watch over the next week or two.
I was struck by the news that came out about Shopify, which had a bit of shenanigans going on in the sales department. It was described in one article as Shopify is the best product I've ever sold in the most poorly run sales organization I've ever been a part of. Notwithstanding, they've had tremendous success.
Yeah.
And so if this is them being incompetent in sales, I wonder what they're going to be like when they actually get good at it. And so what I'm looking forward to is hearing Harley Finkelstein. He'll be on the stage at the NRF show
right.
with a new, improved go-to-market plan. Again, they've had such success, and imagine if they get all their ducks going in the same direction. That could be pretty interesting to keep an eye on. So that's what I was thinking about in the weeks to come. That's a wrap on this episode. Thanks for tuning in, and we'll be back next week. Almost done for this season, and we're getting deep in preparation for next season, season 12, starting at or just before the NRF show. So talk to you again soon.
Thanks for tuning in. To help more retail leaders discover the industry's leading podcast, please drop us that 5-star rating and review on Apple, Spotify, YouTube, or wherever you enjoy your pods. And for more on my strategic advisory services, keynote speaking, best-selling books, and even more retail industry insights, go to stephenpdennis.com.
If you are a brand or service provider looking to take your influence to the next level, reach out to us for sponsorship, advertising, or event partnerships. And if you want to learn more about my own keynote speaking and advisory practice, reach out to me via LinkedIn.